It's time for Past Picks. We go back to June 20th of 2017. You liked Owens Corning back then. You did get out of the name in December, though, at a profit.
Yeah, this is a company that is firmly in the center of the housing market. And over the last 2 years, we had pretty significant weightings in housing-related companies. In December, as rates started to work their way higher, a little crimp put in the housing market and housing stocks. So we run stop losses on our position. We wound up coming out of the position. And so far this year, the home builders and the home building supply companies are having a tougher time. I do think you'll see those turn, but at this time the group really isn't ownable. Owens Corning's a great business, very strong position in pink insulation and roofing products.
Okay, it's Owens Corning's Regeneron Pharmaceuticals. You got out of that one last summer, but let me see it. The sell price, you did lose a little bit of money, so you just cut your losses.
Right.
Got out of
Well,
it.
listen, any position that doesn't work, we run stop losses underneath them. We don't let a little mistake turn into a big mistake. And in a biotech stock, it can cost you a lot of money if you don't cut your losses.
Yes, you got to keep your eyes on those ones.
So
right?
That's right.
Is that the discipline too? People talk about falling in love with stocks and getting too emotional and saying, "Wait a minute, I don't want to even take." Because you recommended it at $4.95, you got it at $4.81. So you said, "Okay, we've lost a few bucks here, but the damage obviously could have been a lot worse if you're still holding it." Is that where the discipline comes in? Set the stop loss, let it trigger, let it do its work.
Yeah, and you know, there's nothing wrong with falling in love with a stock that continues to work. You know, people like to take profits because they think, well, it's hitting a new high, but, you know, for a stock to go from 50 to 100, it's got to go through 55, 60, 65, 70, and so on. So we'll stay in our position so long as the fundamental characteristics continue to get better and price continues to behave as it should. But you know, if you have a portfolio of 40 positions, as we would in an equity portfolio, there's going to be a few that really work out and a bunch that don't. And you just have to be ruthless in carving out the ones that don't work, because you know, there's a lot of downside otherwise.
All right, this one has really worked, and I hope that you're hanging on to it. Microsoft.
You know, if I could use this one again as a top pick today, I would have, although we've used it so many times. I just think Microsoft is in such a great spot. They are absolutely in the sweet spot of cloud-based computing, and they're absolutely in the sweet spot of software as a service or subscription-based software. They think that this business, the cloud business, can grow by 10 times over the next number of years. And last quarter, their revenues are up 96% in this area, 93% the quarter before, 90% the quarter. It's accelerating. And as it accelerates, their margins expand. So cloud-based computing is here to stay. There's really only 3 major competitors, and Microsoft is right at the top with Amazon. There's a great opportunity here. The subscription-based software companies like Adobe, which is another one we own, you know, continue to expand their margins and continue to get a higher multiple because it's a very predictable business. So I would buy the stock right here, right now, and probably make it one of our top 5 picks today.
Is Microsoft one of those great lessons for investors in terms of ignoring the conventional wisdom? Say 5 years ago, if someone said, "What do you think about Microsoft?" They'd say, "They're yesterday's company. Who's going to use Office?" Like they had an idea in their head of what Microsoft was. Microsoft obviously became something else under Satya Nadella.
Well, that's right. And really over the last 2.5 years, it became evident. The stock took out the highs from 2000. We started to see acceleration in those two businesses, and you have to pay attention to that. It was always sound from a balance sheet perspective. They always had a ton of cash and were a big cash flow generator. But when you started to see that acceleration, you knew you'd start to see expanding multiples. And they've really executed. And reality is they have the enterprise customer, so they know who to go to sell these products. And they've been very, very successful.
All right, we're going to be back after this short break. Our number, 1-855-326-6266. It is North American large caps on the discussion table today. So send us your questions.